All right, guys, let's talk about and do an update on Wish. So I did a Wish video not too long ago where I did a full company breakdown. I talked about how they made money, went over the financials, and ultimately if I was going to be buying them. Now, when I did this, this was before they had their earnings last quarter, when the stock was trading up around $9.40. It dropped down to lows of $5, and now we're having a massive day, which I did actually trade. I just closed my trading position up a good amount of money. So you can see here yesterday at 521, I posted big money is expecting Wish to continue to run. I just got some shares. They were all for 1022, so I did close it out today with about a 12% return. But a lot of people are asking me now, would I be buying Wish long term? I've had a lot of people asking me to do videos on this, and I figured that since it's up right now for the day pretty massively, I'm going to go ahead and do an update video. So guys, hit the like button, subscribe, go ahead and hit the notification bell. If you haven't already, go ahead and check out the free Discord link. There's tons of free trades I put down there. You get access to all my long-term positions. I live stream there every single week. We have access to our options technical analysis bots as well as free courses, guys. Just a great community of investors and traders over there. So go ahead and check it out. Now, as far as context logic is considered, this thing has been really beaten up after earnings. This thing gapped down from 10 all the way down to 8. It has just been trending down this entire time. Now, as far as a long-term outlook on context logic, there are some things that I want to go over because this is really starting to get to a good value at this point, but with a ton of risk. So let's just take a look. For those of you who do not know about the company, they operate as a mobile e-commerce company in Europe, North America, South America, and internationally. The company operates under the Wish platform that connects users to merchants. Also provides a marketplace and logistics for merchants. Guys, think about it as a dollar store online, kind of like an Alibaba, but better in my opinion. Now, the issue that I have long term with context logic is the fact that there is this like terrible reputation for Wish, right? Like the Wish version of X or the, Alibaba version of blank. But however, if you look at Alibaba, people still buy it. If you look at dollar stores, like I said, the dollar store version, dollar stores are still popping up everywhere and people still use them every single day. So just because there's sort of a bad connotation around it doesn't mean the company can't make money, doesn't mean that there's not a marketplace for it, specifically in a lot of other countries that can't afford, as much things as we can in America or in North America and Europe, and also for people around here who just want to buy something that's not of the highest possible quality, like phone chargers, etc. So overall, I think it's a very risky company, but I do think that they can have huge success in the future. But let's look at some of the risk checks here. Are they forecasted to achieve profitability? They are not expected to achieve profitability within the next 3 years. Is the share price liquid and stable? No, it is not stable. Obviously, stock has been getting murdered. Has there been a substantial amount of insider selling within the past 3 months? Yes, there have. We're going to go over that. Are revenues forecasted to grow? Yes, they're forecasted to grow at 59% per year. Are they in a good financial position? Yes, they have enough cash for at least 1 year of operations. Obviously, they don't pay a dividend, yada, yada, yada. So right now, let's take a look at the current valuation. So, sorry. Simply Wall Street has context logic at $30 fair value. I don't agree with that. I think fair value for Wish right now with the amount of risk that you're going to take on, what the company's worth, the fact they're not going to be profitable for 3 years, yada, yada, yada. My fair value is right around $9 to $10. Fair value doesn't necessarily mean like fair value is, there's not like a specific equation to do this. You can do it through certain ways, which I'll share with you guys one time. Basically I have an Excel spreadsheet that I use to calculate trailing 12-month EPS, growth from there, my expected return, and then, a risk ratio. So I'll explain that in another video. But for me, I think fair value is right around $10 to $11, maybe even $9. So you're still getting at a 50% discount. But I think in order for this company to be worth $30 a share, they would really have to become profitable or at least very close and grow at an insane rate, which unfortunately I don't see that happening. Doesn't mean that there's not enough money to be made across the board, but ultimately I don't see that happening. Now, if we look at future growth, this is something that does interest me. Most analysts have future growth set between 49 to 65%. Right now, Simply Wall Street saying 60%, and I would agree with that. So there is a lot of growth in their future, but like you're going to see with most of these, small tech growth companies, really they're going to end up bringing on a lot of debt as well, unfortunately. If we look at past performance, this thing has been beaten to hell, down 40%, they're saying within the past 5 years, but basically since IPO, this thing has been beaten to death, essentially. No dividend management. I haven't looked too much into it. I haven't even looked into Peter Schwolsky But I will have to look into that. He makes $78 million a year. Jeez, what am I doing here on YouTube? Anyway, but yeah, overall, there has been a lot of insider trading. This is something to watch for within the past couple of months. Specifically, 3 months ago, there was nearly 1 billion shares. So you do have to watch out. It's about $7 million worth of insider selling. So that is something to really keep an eye on. Now, as far as the income statement here, you can see obviously from 2018 to 19, decent growth, 2019 to 20, great growth, 2020 to the trailing 12 months, even better growth. If we look at the balance sheet, you can see here from an asset standpoint, 2018 to 2019, good growth, 2020 to 2021, not the best as far as assets. We have way less assets now than we do last year, but there was a pandemic. So obviously you're going to see that a lot. But one good thing to see though is that even though their revenue did go down, I mean, total assets went down, not revenue. Total assets went down. Total liabilities went down significantly too. So from a ratio standpoint, it did go down, which is very good. And if they're not profitable within the next 3 to 4 years, it's not that big of a deal. There are a lot of companies that are not profitable. Like Amazon wasn't profitable for the longest time. Tesla wasn't profitable for the longest time. But for me, it's just the amount of debt that a company's accruing. If that starts to generate in a massive way and revenue is not growing at the same point, that is something that really worries me. Now, as far as Wish is considered, would I be buying this long term now? Well, before today, when it was at 492, potentially. So if you got in within the past couple of weeks, I would just probably hold it, to be quite honest. For me, if I'm looking at the amount of risk I would have to bring on with my portfolio for Wish, I do think in the next couple of days and weeks, it is going to push. It does, from a trading standpoint, look like we could fill this gap up to $10, but that's going to be all reliant on earnings. I'm going to talk about that probably in a video today on the second channel. But from a long-term standpoint, I think that this company has a ton of risk, but I think that it is a risk that could be worth it to take if you are somebody who is interested in it. I would not go putting a lot of money in, only amount of money that you'd be willing to lose entirely or at least lose half of. But if I'm looking at some of the more speculative investments that I'm looking to make, like for instance, I just took a position in Zynga long term. I'm thinking about taking a position in CGC long term. Those companies to me have a lot less risk, and it's probably something I would rather hit over Wish. But if you're already in it, if you believe in the company and if you really love it, go ahead and hold on to it. I think that this company's upside is massive, but remember, with mass amount of reward comes a mass amount of risk. So it is something just to be careful about, guys. I'd love to hear from you. Comment down below. I love to hear from your guys' ideas on bullish thesis, bearish thesis on the stocks that we talk about, your positions. It's great, guys. I'd love to hear from you. Hit the like button, subscribe, go ahead and check out the Discord. Like I said, it's completely free. And if you are somebody who wants to learn how to trade full-time, turn this into a profession, same with investing, go ahead and click the link below. Get access to my private stock market mentorship group. It's completely free for the first month. You get access to every single trade that I take live as soon as I take it. Get to live stream with me and my team every morning for the first hour of market open. Get access to our 60-hour course library as well as our private Discord server. Guys, thanks for all the support. Hit the like button, subscribe, and I'll see you next time. Peace.